Welcome to the Two Wealth Show, a show that shares how you can create real wealth for you and your family. I'm one of your hosts, Justin Bogard, and my co-host is Elizabeth Sickles, aka Super E. I am a real estate note investor, specializing in performing residential real estate debt. I find the deals, acquire them for my own portfolio, as well as educate investors while walking them through the process of owning a real estate note. My co-host Super E, a real estate investor, specializing in short-term rentals and the management of them. She connects investors with short-term tenants and manages everything in between. Our show is sponsored by BrightPath Notes and Elizabeth Mayora. You can find out more information by visiting our websites at brightpathnotes.com and elizabethmayora.com. Well, hello, everyone. Welcome to episode number 15, and I'm Justin Bogard of the Two Wealth Show.
And I'm Elizabeth Sickles.
Elizabeth, you are obviously not in your office right now.
I am not. It is 4-H fair time, and my nephew showed pigs today. So
they showed pigs. Okay, cool. So what's that like?
Well, they did not have, which we knew this, they did not have championship pigs by any means. So my one nephew placed fourth out of 6, and my other one placed fifth out of 6.
Okay. So I assume that they have these pigs on their farm at home and they like raise them, and then the judges have some sort of criteria and they judge the pig on it, right?
That's correct.
Okay.
Yes. There's also showmanship involved. So how does the kid interact with the animal? And yes, there's a lot to it.
Very cool. I've never been to a 4-H show like that before, but definitely heard a lot of people talk about it, and it sounds fun because everyone has a different animal, I guess, that they show, and they do similar things to it, or is it just like pig category and like cow and?
Oh, there's all kinds, especially with cattle. You've got steers and heifers and Jersey, and then you have the different breeds, and so much more complicated than just cows or pigs.
Okay. See, that's my ignorance. I don't know enough about it to talk intelligently. So
and it ties in with real estate because we have the farm prices that continue to increase, right? God's not making any more land.
It's true.
And with farming now, we've got droughts in a couple of different states. So some of the commodity prices, the commodity prices are all over the board right now. But I expect those to go up if the droughts continue.
Okay. Well, we're from Indianapolis. We've been fortunate enough to have a pretty wet July so far. So it looks like the crops where I live in our area, everything's nice and green and tall and looks really healthy versus, last year, I think it was in Indianapolis, we had pretty dry weather, pretty dry couple weeks spans to where I think some of our crops had to be reseeded a couple times during the course of last year.
Yes, we're in a much better position this year.
Yeah. So let's start off the conversation today and talk about inflation.
It is rising. So the numbers just came out last week. We've got the largest inflation in, I forget how many years now. But overall inflation's at 5%, which what that means is our money doesn't go as far as what we're used to going. Mm-hmm. So an example that even if you're not into doing real estate yet, if you're looking at real estate, I got notice when I logged into Amazon the other day that some of our products, one of the smoke detectors, combo carbon monoxide detectors that we use went up 26%.
Wow.
Another product went up 25%. We had one product that we use a lot that decreased in price, and that was a 1% decrease in price, but everything else was increased. Okay.
So not that you're an economist or I'm an economist, but what do you think caused the rise of inflation to be not just, we've heard about lumber and we've heard about obviously real estate appreciating. So these other, let's say, ancillary things that are happening that are commodities that we get for, especially, let's talk about your business, the cleaning business, and then the short-term rental management business. There are a lot of little small house items that you need to get, I'm assuming on a daily basis for the properties that you manage. So is it just you think because we have an employment issue as far as we don't have a lot of workers that are accepting jobs right now?
I think it's a combo of printing money because money's not free. And
Mm-hmm.
then also the fact that we have to continue to raise prices because, I think what maybe people don't understand is when prices, if people aren't working, we have to have somebody to work, and to incentivize them to work, to pay them more. So, I've had to raise cleaning rates because I've been struggling finding people that want to work.
And then if you do find somebody to work to continue on with what you started with, is that you have to give them such a high benefit, meaning their hourly wages, to incentivize them to choose you over maybe a different place to be their employment, right?
Mm-hmm. That's correct. And even like tomorrow, I already do bonuses. Tomorrow, I'm introducing another incentive plan for the cleaning team. So, and what that means is if it costs me, or if it costs me money as a business owner, that gets passed right on to the consumer.
Right.
For anything, it's always a consider paying for it.
Right, because the business owner couldn't sustain to pay their employees much more and not be able to raise their prices. Otherwise, they would start to become in a negative cash flow, or their financials would be in the negative numbers, and then they would go out of business, right? So it kind of makes sense. So there's a lot of interesting dynamics going on with the we'll say the national economy as it relates to unemployment and unemployment benefits right now. So I believe, Elizabeth, unless this has changed, I believe September timeframe is when these unemployment checks, I believe, are going to stop coming through because of the COVID-19 related issues in 2020. Is that your understanding as well?
Yes, and it cannot get here soon enough.
Yeah.
I think the folks voting in, continuing this unemployment, they do not run businesses. They're not trying to find employees.
Yeah, it's difficult on both sides, because I'm sure there's people that desperately need that money and they just have a hardship or a situation that was just unavoidable. And those are the folks that obviously deserve to get the money and should be first in line. And then there's folks that could choose to do something to benefit their families, but they chose to go down a different path, which, I guess at the end of the day, if someone can make X amount of dollars per week and not do anything, and make a little bit lower than what that X number is, and work full time during the week, I mean, I can see that decision going very easily in one direction, if one were in that position. So it's just an interesting dynamic that we're in right now. And like you said, I agree. I hope it does end soon. And it seems like, I don't know of any business not looking for help right now. So I gotta imagine our job growth is going to skyrocket once the checks stop being printed for unemployment.
I hope so.
Yeah.
And you can go to any state. I was just in Florida. Every place you have out has, help wanted, hiring now.
Yeah.
And, even like the Pizza Hut where my UPS box is, they're paying $17 to $20 an hour. I mean, that's for delivery. That's crazy, not including tip.
It's interesting. I know we're kind of getting off real estate subject temporarily here, but I think it'll be interesting to note that those that chose to get a job as opposed to not taking unemployment, if they got a higher salary because they chose to get an employment today versus employment in the future, those that try to get employment in the future after the checks go through, do you think they're going to get wages that are as high as the people that chose to get the employment during this economic time? And then will they be grandfathered in, the ones that did? Like, it's going to be interesting. And then there's going to possibly be some resentment. So I can see some of this kind of dovetailing into just a very interesting dynamic going into the future for employment.
Mhm. And everything works together, right? So how this ties into real estate is when you go to Lowe's, and if they've got the help wanted sign out there, they're going to have to raise prices to get
Mm-hmm.
more people to work there, which raises our cost, to do whatever we're doing in real estate.
Yeah. So I think we can both agree it's just an interesting dynamic, and unfortunately, we don't have a crystal ball to see what's going to happen. So the only thing we can do is absorb as much cost as we can stand, and then obviously you have to pass along some of that that increase in your material costs, or and then for your services as well. So I totally get it. I totally get it.
It's
So
very interesting.
switching gears on a slightly different topic, we wanted to give an update on kind of how the forbearances in the mortgage industry is looking right now. And the national delinquency rate, Elizabeth, is actually back down to under 5%, which is a very strong indicator that things are getting back to normal. We still have a lot of seriously delinquent loans because the forbearances that were entered in about 18 months ago still haven't expired yet. So we're yet to see everybody go through the forbearance moratorium to see what is actually going to be delinquent loan volume versus performing loan volume. And as we got into COVID, and the total forbearances is, you can argue it's in between 8 to 9 million that folks that were able to take advantage of the forbearance rules, let's just say, for those mortgages that are, FHA, VA, Fannie Mae, Freddie Mac, Ginnie Mae, the big portfolio loans, the big securities from the big banks, all those loans, let's just call it about 60 million of those. That's the data that we're looking at. Now, there's a whole other set of data, Elizabeth, and we'll say another 50 to 60 million that is just, not part of that data set because it's more of these mom and pop sellers. I'm just throwing that number out there. I could be way off, but it's just a set number. We can call it, 10 million, 20 million, what have you. We'll call that kind of shadow inventory because we don't know how to track that as well, because it's not regulated through the normal bodies, like government sponsored loans. That's easier to track. So what we've seen, Elizabeth, in that data set of the 8 to 9 million forbearances, we've seen about 64% of those come out of forbearance in a positive direction, meaning the loan got paid off or it got reperforming at some point. So the home, and we've harped on this a lot, the home appreciation factor from end of 2019 all the way through 2020 to 2021 has saved a lot of people from being potentially underwater on their mortgage. So those that saw themselves not being able to pay their mortgage, they could simply go out and refinance, right? With a lower rate possibly, and they'll get the debt paid off because their home appreciation went up a lot in value. So they had that, what we call tappable equity. So that's how a lot of these, so 18% of that data set that I talked about, the 8 to 9 million, got paid off early because basically they're able to sell their house for a heck of a lot more than what they have into it. Even if they were behind on payments, they're still not really underwater because they got so much equity in from this rise of home price appreciation, which is pretty neat. So it's a completely opposite scenario of what happened in 2009, 2010, where real estate dropped out of the market, and then everyone's mortgage pretty much went underwater, kind of overnight. That had very little skin in the game, meaning like maybe they had 5% equity, 10% equity in their house. So it's just really interesting right now. So it's a very positive sign going forward that a lot of these forbearances are going to come out and just be reperforming, or they're going to be paid off or some way, shape, or form in a positive direction. Now, there is going to be a sliver of that. We'll just call it 600,000 to 1 million that'll probably be delinquent, and that may not be able to go through loss mitigation and get caught back up or be reperforming or have some sort of extended forbearance on those loans. So that data set will be interesting, and that'll flush a new wave of non-performing loans through the pipeline. Now, what's also interesting to note, and we'll find out here in the future, is if the non-performing inventory, is it all going to flush at once? Or is it going to be a steady stream of non-performing loans that go through this process through foreclosure throughout the next 18 to 24 months? That'll be interesting to see. I think it'll be the latter of the two. Well, it'll be a slower stream as opposed to hitting it all at once. Because from what I'm hearing on our side of things, and then our guest Alex Kolzewski that we interviewed a few episodes ago, he confirmed that a lot of these big banks are trading some of their paper because they're not able to handle all the loss mitigation that they want to with their mortgages that they are servicing. And so that would make sense to me that they're trying to piece that off, and everyone realizes it's really best to work with the borrower and try to figure out how to get them to reperform as opposed to just going straight to foreclosure, because there's, time and there's money involved. And then there's just, you don't want to really hold that mortgage if it's delinquent, if you don't have to, unless you're investing in it on purpose.
That's very interesting.
Yeah.
And just how different it is, Justin, from 2008, 2009, because I was in Detroit at that time. So we really got hit hard because automotive took a huge tank. They had a huge bailout. And I'll never forget a conversation I had with my neighbor saying, there is no way I would invest in real estate. And man, that was the best time to invest in real estate.
Yeah. It's funny. It's funny what you don't know when you're ignorant to a subject matter. It's so funny. Like when we were talking about how, I was ignorant to the 4-H process, and I have no idea what goes on, how much passion you can have into it, and how fun and neat it is. And same thing like you ran into in real estate. And I would have thought the same thing when I was going through 2008, 2009, is I don't know why would anybody get in real estate, but you don't know what you don't know. And then once you know what you didn't know, then your whole world can change, and you can benefit from any economic cycle at any economic time. And especially being in real estate, everything is cyclical. And so just because you don't want to be a one-stop or one-trick pony, I should say. And so especially in the note space, there's a lot of different ways that you can adapt and adjust and invest in notes, just like in traditional real estate, outside of the note business too. It's just so interesting, and it's so fun to see the opportunities that you can, number one, obviously, you and I both agree, we want to help somebody out, right? How cool is it to help somebody out, especially the one that lives in the house or the investor that's investing in the property to benefit somebody else, like short-term vacation rentals. I mean, those are obviously the biggest boom right now, and correct me if I'm wrong, is the vacation rental space, because everybody's just wanting to escape from their confined space that they've been in for, a year. I know, and I'm one of the customers as well. I mean, we, as soon as we could, and when school was out, we went right to a vacation rental and had our time at the beach and stuff. And we're doing a couple more over the summer this year as well. So
that's great. And I'll tell you, our gross nightly, this includes cleaning, but from just on one of the platforms that we're on, from January to this month, we are doing over 3 times what we did in January.
Holy cow.
This is going to be our best month ever. So people want to come to Indy.
Yeah. I mean, the law of averages kind of will play into this, right? Because we had kind of a vacation rental drought, we should say, for an extended period of time. And I don't recall exactly what month time frame that was, the drought, your business and where you're at versus other people's business and where they're at. But we're making up for lost time, right? So hopefully we'll get back to what normal is, to where, what you saw in losses and was the scary times is gonna be made up for now, because you held things together and you survived and you got through some rough times, and folks like you, so it's really cool to see that. So I really believe in the law of averages. Just like in the financial crisis of 2009, 2008, real estate prices dropped, but you'd be a fool if you didn't know that real estate prices were going to eventually go back up, right? And so that's just, life has shown us that a real estate's always going to appreciate, 2, 3, 4%, year over year, even though some years may be 25% and some years may be negative 10%. Everything's going to average out in the long span of things, just like the stock market in general. it's all, you're going to have severe ups and severe downs, but then that steady curve, that steady graph is just going to show you that linear line going, whatever that return is, let's just say 5-6% return.
And, if for our listeners and our viewers that, maybe you like the mainstream media and, you hear all these fear stories all the time and how everything's, going to heck in a handbasket, but it's always important to remember that there's always opportunity. So when you know what's going on and you know what's behind it, just like Justin sharing the forbearance and where we are with that, you can plan for it and you can invest so that you can make whatever goals you need to make. There's always opportunity.
Right. So Elizabeth, kind of switching topics for maybe the last part of our conversation here. So you were talking to me offline about sheds, and I kind of want you to get into how we started this conversation, if you don't mind.
Sure. So I was at a conference last month in Tennessee, and one of the other attendees is from Louisiana, and what they're doing down there, because rents, they actually have workers down there, but rents have gone up so high and they don't have enough housing that they are using sheds. So if you think about Menards or Lowe's, the tool shed, not even tool sheds, just the garden sheds that you see outside, they're making those little efficiencies. So they'll put in a little kitchen and then a bed, and they're renting those out. So they're doing these whole little communities on the outskirts of towns. So it's a great opportunity for real estate investors, whether you want to be the landlord, if you want to finance one, if you want to be the note holder, with Justin's business, or even if you want to short-term rental them as well. But that's something going on, at least in Louisiana.
That's pretty interesting. When you say that, immediately, obviously, I think of the tiny houses, and I think they had an HGTV show about tiny houses and how people would turn, smaller buildings into, their dwelling place. I imagine the shed's probably going to be a little bit tighter space, but it's almost, I picture it almost the size of like a college dorm. Mm-hmm. So where maybe the ceilings are going to be taller than normal because, a shed's vaulted, right? And I can see these being pretty interesting. So I want to look this up after we get off of our recording here and just see what some of these are, because it's just interesting how somebody's creative enough to figure out how to make that space a livable space, and then someone's always going to be creative enough to figure out how to monetize on that space or to make a business out of it.
That's right. And if you think about it, it's quick housing. Mm-hmm. It's inexpensive. I think it's a great idea. So especially for, and I don't know what type of price point they're using, but you have people that need price points at high and low. So why not fill that void? Right.
And you can imagine a typical parcel or typical lot is usually, a rectangle size, let's say like 120 by 80. And so you might be able to fit 3 or 4 of these on like one parcel if you wanted to, if you had a cluster of land, and you would make, like you said, a community out of it. And you could have like, an A and B apartment or B and C or what have you. And you could get a lot of people to fit in there if that's the avenue you want to go down. Or you can buy a piece of land, have more land with a smaller house footprint to where you have more yard space as well. So it's really interesting. So I'll have to look into that a little bit more, but it sounds like a cool thing that if you could put it on a trailer and pull it behind your vehicle, it could be like, a different version of a camper, if you will.
Mm-hmm. Exactly. Yeah, you got to love the U.S., right? We can make anything happen.
Yeah, right on. Well, Elizabeth, do you have any closing thoughts for today's episode number 15?
I think it's just, ending on the sheds, just always keeping an open mind. There's a solution, and it might be sitting in the parking lot.
That's right. So next time you drive by a shed, for our listener here, think about if somebody's actually got their kitchenette in there and their bed in there. So
that's right.
It may be a great place to put like a guest house for your student that goes off to college. So when they come back, they got like their own space they can mess up, right? That's what I'm thinking right now.
Send your teenagers out there.
Right. Yeah. You go out there and mess that place up. Don't come into our house anymore.
That's right.
That's exactly all right, Elizabeth. I'm Justin Bogard for the listener with Bright Path Notes. Don't forget to check out our YouTube pages. Our YouTube channels, the Bright Path Notes YouTube channel and Elizabeth Mayora's YouTube channel as well, to catch the video stream of this podcast that we're doing right now. So, Elizabeth, as my mentor would say, I'm out of soap.
All right. Well, thanks, everybody. We will see you or chat with you the next time.
Bye.
Bye.
Two Wealth Show is produced by Justin Bogard and Super E, sponsored by Bright Path Notes and Elizabeth Mayora. Thanks for listening and watching for our show.